So let's get started on this. All right. Budget. The budget model is the budget and the profit and loss. Don't raise your hand, but if you don't have a profit and loss statement, I want you to start a profit and loss statement. And for a lot of single agents, it's really simple. It's an Excel spreadsheet. On the left column is all the income you made that year, and on the right column is all of the expenses you had. I still use that very complicated method for my Chris Lindquist coaching business. On the left are all the times I'm paid. On the right are all of my expenses. And then there's one simple formula at the bottom that says all the income in, all the income out. That's my total. And then I get the account. Pretty tough profit and loss statement, right? Okay. On my other business, it's like 90 categories and 3 pages on a report. So, but a profit and loss, keep a profit and loss because it'll tell you how you're winning so that you can make real-time adjustments. Budgets are a plan of what to do with your money. All right, we're going to talk. So one thing a budget and the profit and loss shows you is you're not spending, you're investing in your future. You're investing in your future, but you're going to be measured on that. And you're also going to be practicing accountability, not accounting. I don't do my own taxes anymore because I can't do them. Like I don't know how, I'm not smart enough and I can't keep up with everything. But I do go into my profit and loss and my budget every month, every single month. Even on my coaching one, which is very simple because I want to see, am I spending more money? Am I not spending more money? And if I am spending more money, that's okay. If what? If I'm getting a return on that. If I'm not getting a return on that, then we got a problem, right? Okay, let's go to the next slide. All right, let's talk about budget terms. If you're kind of tuned out right now, pay attention to this because this is kind of fun. You have a cost of sale, and that's a cost of acquiring revenue. What is a cost of sale in our world? Pay your MLS dues. That's an expense. But I can see how you got there though. I really can. And I can see how you got there. Your cap and your royalty. Here's another way of saying this. If you don't sell anything that month and you still have to pay for it, it's an expense. So that's why the MLS dues, you have to pay that whether or not you sold something that year. Well, you don't have to pay. You can just not be a realtor anymore, right? But so that would be an expense. If you have to pay it regardless, your phone bill is an expense. If you rent an office in here, that's an expense. I would even argue that's your monthly fee, operating expense. But your cap and royalty are cost of sales. When you have a team, if you have a buyer's agent on the team, you have your income, and then you have your cap and royalty, and then you also have to pay your buyer's agent. Whatever those splits are, they are. But those are costs of sales, not expenses. Is that clear as mud? Okay. So cost of sales. Then you have your gross profit. So you all your income in minus your cost of sales equals your gross profit. Follow me? Then over here, you take that gross profit, you put it up here. Then you have your expenses, then you have your net income. All right. What's really, really cool is we're going to give you parameters around all of that. So scroll on to the next one for me. And what we're going to say is, in general, this is the millionaire real estate agent model, that 30% is your cost of sales, 30% is your expenses, and 40% is your income. That's if you're planning on making $1 million a year or somewhere around there. Just for fun, because I knew I'd be talking today, I went into my business. And what I found out was my cost of sales is almost 2% because I don't have a lot other than the caps and royalties. My operating expenses, though, is up around, what was it, 61% or something like that. My operating, because my labor is 40%. Labor is 40%. And then my net income is around 32.6% so far this year.
So what would other cost of sales be in real estate?
So cost of sales in real estate would be your cap and your royalty, your buyers, your sellers, agents. But almost everything else is going to fall into your expense category. So, and we'll break that down for you here in a second. Keep going. So your cost of sale and expenses categories. So your listing specialist in the millionaire model, your cost of sales will be your listing specialist, your buyer specialist. Other costs of sales are going to be very minimal. They're going to be very minimal. And then that's going to add up to a total, in this case, $750,000 if we're looking to make $1 million. And our operating expenses, however, pay less attention to these numbers and more attention to these numbers. So I've often asked a group of agents, hey, bring your profit and losses and let's talk about them. And sometimes people have a reticence to not talk about, they don't want to talk about the actual numbers. My expense on this was X, my profit was Y. They want to talk about percentages, which I'm okay with, because percentages also tell the story. So what you're going to do is you're going to kind of follow along with this. You got your compensation at 14.4%. So if you've got a team, that compensation could be your assistant. If she's paid on per deal transaction, Kristen, she'd be a cost of sale. If he's paid as a salary, then it would be an expense. And that expense would be part of the compensation for that person. I actually pay myself a salary, so I could actually have higher profit and lower compensation by excluding me from compensation. Make sense? So if you are a single agent and you're making about $90,000 or $100,000 a year, $75,000 a year, you can either choose to pay yourself to get used to giving yourself an every 2-week paycheck, but the higher your compensation is, the lower your profit's going to be. Right? Wayne, any thoughts on that? Because you've run a single agent business for a long time, right?
Yeah,
so, yeah.
still do.
Yeah. Okay. So then you have a lead generation expense. We talked about lead generation this morning, and we talked about how much money you're going to spend and all the other kind of fun stuff. Inside your business income, when I was in college, when I dropped out of college, I was a marketing major or marketing advertising major, and it was always 10%, 10%, 10%. Any business should be spending 10% back into their future through advertising and marketing. What we have seen in the real estate agents is it's somewhere between 7 and 10%. Depending on what level they're at and all that other kind of fun stuff. But so a good practice for that is every time you get a commission check, put about 9% away or whatever percent you're going to do for your marketing. Occupancy, your office fees, education and coaching, like they've got 2.5% in there. That's $62,500. Will that pay for a family reunion ticket? Sure it will. And then you got your supplies, communication tech, auto equipment, all the other kind of ones. So your cost of sale will break down fairly simple. Your expenses can be broken down here, and then you can start having subcategories if you wanted to. That's more of a one-on-one conversation. So go to the next one for me. So here are some budget benchmarks. So everybody in here should be paying attention to this. That flyer we sent out last week from the front desk, that had the short workbook for the budget model and the lead generation model, the economic model, has this in there for you guys. Okay. If your GCI is $150,000, which would be about how many millions of dollars in sales? Speak up loud.
I get a word right.
He just knows $30,000, man. If your GCI $5 million. Right. $5 million. So how many houses in our area is $5 million? For about 350. So what's $5 million divided by 350? Hey, the reason these things cost $1,200 is their phones, cameras, black books. So what's a $5 million divided by 150,000? Or $350,000.
350.
Yeah.
14.
$14. So just barely over one house a month. Just barely over one house a month. In that case, though, what they've got is $19,500 for the cost of sale. They've got gross profit of $130,500, and then their expenses is $57,000, so 38% for a net income, so profit at 49%. So in this case, if you're making 150 and you're keeping, let's say 50% easily, what's 50% of $150,000? $75,000. I think if you're a really judicious single agent, you can get this closer to 60% or 65%. If you're investing in your future. If you're not investing in your future, you might get it to 70 or 75%. I'm not sure that's a smart idea, but depending on where you are, it could be a smart idea, right? And then it goes up. Here's what's really fun. Watch this. By and large, here's what we see. 150, 340, 640, 970, 1.6, and 3.4. What we see by and large is agents, look what happens to their profit as they do more volume. Everybody see that?
Why is that?
Why is that? Is a fantastic question. What we generally see is real estate agents are fantastic at selling homes. They're not fantastic at running businesses, not until they learn to be. Because look what happens when they start following the practices that we're talking about as far as the economic model, the budget model. The best practices that we're seeing in the top agents across the country, in other words, Gary's top 100, is that profit is 39% or 40%. 39% or 40%. My last 5-year average has been 35.6%. So I'm not quite a best practice. My business model is a little bit different, but that's no excuse. But what it does is it makes me go back to my budget all the time and pay attention to what my expenses are. And I need justification as to why we're spending that money. It's no different than how we're running this market center. Show me how we're spending our money and why it's working out that way. Any questions around this? I feel like I'm teaching accounting 101 at college. Okay. So, but this is fun. If you have individual questions about that, there's my phone number. I'd love to answer your questions if I can. If not, I'll point you to the right resource. Let's go to the next one. So a lot of people will say, but Chris, explain those expenses to me. Again, this is in that little booklet you got last week before team meeting. All of this here, if you have 150, so I want to know how I got to only 49% profit. Well, he's got salaries in there. So this person is actually spending $8,370 on their salary because maybe they're getting used to paying themselves every other Friday, which is fine. Hang on just a second, Luke. So that means that 49% profit is really almost 55% profit. Clear as mud? Luke?
I was just gonna ask, do you have any budget templates? Like for those of us that aren't good at Excel? Budget templates for new agents.
Yes.
You can plug and play and it does the math for you.
Yeah, we actually have a chart of accounts that Trisha has put together on a spreadsheet. Just ask Trisha to email you the chart of accounts that any agent can use it.
But that's different than what I'm asking about. I'm asking for like a template that has like, you put in your numbers
Yes.
and it automatically.
Yeah, you can put it.
It's always been helpful for me with
Sure.
budgeting for somebody else to create a template.
Yeah, the chart of accounts is a profit and loss thing. So you can put in specifically where your money came from and specifically where your money goes. And it will help you. And then you can compare your percentages to these guidelines here. Now, if you're an agent in here that's closer to 18 million or whatever, so then you can come up here and you can follow these percentages, right? You can go through and kind of compare yourself to other people, which, by the way, is one of the powers of the community that we should all be taking advantage of. Like, do we want to have a profit and loss community where we all come in once a month and share our, not so that we can say, who's the biggest guy or who's the biggest gal, but so we can say, what percentages are you spending on advertising and how's that working for you? And as you go down through here, you can see, but like occupancy, they've got $4,275. Well, again, I don't know why as a single agent, you need to spend $4,200 on a fancy office unless you want to. Okay, if you want to, great, knock yourself out. If you don't want to, then I would just consider using our spare space in here and knocking that all the way down to maybe like $1,200. That would be another maybe 2.2 or 2.3% to your profit. So now it's not 55, it's more like 57. You see how we're doing this? It's just a matter of thinking. And as you go through education and coaching, 5%. You want to leave room for your personal growth. I can remember very specifically being at our old office and looking around and realizing there's nobody in Keller Williams. There's nobody at this office specifically, but there's nobody in Kansas City that I know because I hadn't met Kurt Salkoff yet. But there's nobody that I know in Keller Williams that is trying to do what I'm doing. Nobody. So I got my rear end on a plane and I flew to Arizona, and I sat there with agents from all over the country, about 100 of us, who were all trying to do residential investment property back in 2006. Just that. And so that came out of my education and coaching budget. I was literally putting aside a certain amount of money for that every time. And then communication and technology, automobile, all this kind of stuff. I love the automobile, $4,440. How much are you spending on gas? You know, you can start to pay attention to all this. But does this make sense that there's already a proven path and all you have to do is start putting your numbers and having the, for me, liquid courage at first to, I would open up a beer and I would say, these are all of my bills. I'm going to pay them. And then by the time I was done, I would open up another beer and I would say, this is what the red book is telling me it should be, and this is what my actualities are. And it made me make some hard decisions. Some hard decisions. Some unpopular decisions sometimes. And yet that's what I had to do to justify where I was going in my real estate business, where you are going to go in your real estate business. Does anybody have any thoughts or ahas or stories around that?
It really makes sense. I think that, at least for me, I know somebody's thinking what I'm thinking. The difficulty is seeing the model and then breaking down that how it's really sell more houses, because this is good in theory if you're making X amount of dollars a year. If you're bringing in 150,000 GCI, but the average agent, single agent, does not make that. Let's just keep it real. And so if you're only doing 40, that model is just not feasible, because if I'm going to take this percentage and put it there, I literally have nothing. So a large majority of us are just.
It's pretty feasible. And let's look at this. So how commission flows. Everybody got one of these on your table? Okay. So let's talk about this in a real sort of space. So this is not Keller Williams approved. This is just me on real life from what I see in a lot of agents, right? And so this possible scenario, single agents making more than $90,000 a year, but it works. Don't get hung up on the percentages you see on this. You can adjust the percentages however you like. Like if some of you might go, well, I ain't giving away 12% no matter what. Then don't. Give away 2% or give away nothing, whatever you want to do. But commission comes in regardless, or fees. If I was changing that today, it would be the fees. Then you have your broker split, which would be a cost of sale, right? Then it goes into your business checking, or for the love of Pete, let it go into your business checking, not your personal checking, okay? So, but from there, now, once it's in your business checking, you've got to make a decision on what you're going to do with that, all right? You can hold or fund, put some of it to hold or fund your business. And I think this is going to the very crux of what Asa is saying. sometimes when you're starting your business and you don't have enough business going in, you're going to siphon off most of that 10% because you got an electric bill to pay. Right? You got a gas bill to pay. I've been there. I've also been there, and some of you have heard my story. I'm not going to do it again, but three days in a row and 5 days out of 7 having macaroni and cheese with maybe throwing in some hamburger on a couple of those days. Are you willing to sacrifice your frickin' Starbucks coffee and send out 5 more postcards instead? Are you willing to sell your car with a $600 car payment and buy a car with a $200 car payment for a little while? You might have to adjust themselves. Folks, if you want to make doctor money and not go to school for 7 or 8 years and go through all the practices and the expenses, come on, let's be real. Is it okay to say that out loud? Let's be real. You have to invest in your future. Do you think I enjoyed arguing with Lamar Hunt Jr. over at Fox Camera at basically 103rd and State Line about the Wizards and how he was screwing them up? Thank God he sold them, by the way. And one of the employees said, "You're the only person I know that will argue with a billionaire about their soccer team." I said, "Yes, I'm upset about it." But I was there because I was earning like $9 an hour, 3 nights a week to help pay the bills while I was telling everybody I was a great real estate agent. Yes, whatever you have to do, do it. But these numbers stay pretty true across most of the things. So whether you're making $40,000 or $80,000 or $100,000, the percentages pretty much work out. You can adjust them as best it fits you, and I want you to. This is a model, it's not an exact. It's not called the Keller Williams exact. It's a model. You can adjust this. I didn't pay myself a salary, so that went right to the profit instead. Right, so you got to figure out what works for you. So thanks. But as you go through this, what's not negotiable is you save money for taxes and the tax man. Like, but he had to make payment arrangements with the IRS. You don't have to raise your hand, although I am raising my hand because I did. All right. And then the rest goes into your personal checking. Again, is it 60%? I don't know. You might do 80%, but if it's 80%, then 20%'s got to come from somewhere. Right? You're going to adjust it. And then as a way to build your best life, we put money into savings. Then once we had enough money in our savings, it dripped out into investments, our first rental property. Oh man, I'll never forget the first time I bought $1,000 in stocks, which I shouldn't have done. I should have bought mutual funds, and I lost most of it because I was an idiot and I didn't know what I was doing, but I really wanted to but I was so excited. I was a real person. I had money to put in the stock market. I did everything wrong, but I did it. So that's because my savings had hit a certain threshold that I knew would be there. And then my giving, whatever percentage you want to put in there, put it in there. Whoever you want to give it to, give it to. And then the rest is what you actually get to spend. And so I think for a lot of you, though, the first thing all you can really see, because I've been there, is that, wait a second, there's money leaking there, there's money leaking there, there's money leaking there, before it ever gets to here. That's called being a business owner. You are a business owner. You have the most exciting opportunity for less than $2,000. You can make anything you want to make, but you don't get to make doctor money without doctor investment in something. Your heart, your soul, and your first fruits.
And it all makes sense. My comment wasn't, I didn't mean that negatively. I just know what we think in here.
Yeah.
And so
That's
just keep it real.
The comment wasn't negative. The comment is real life.
Yeah.
Real life. And my pain is still there sometimes. It's why financial advisors have told me I sit on too much, I'm too conservative in my investments. But I sleep good now. I didn't used to sleep at all when it came to money. I don't know if anybody else has ever been there. And if you're there right now, you're not alone. You're not alone. But what's going to change in your life? So go to the next one for me. So this is that chart of accounts. And Trisha has something like this on a spreadsheet, knock on her door. She lives for sharing spreadsheets. This is what she does, all right? Going. So you can create a business plan, but go back for me here to the expenses real quick. Okay, right here. Let's talk about this real quick. Two important topics of the millionaire real estate agent's version of the budget model, which is still true today, except for some of these numbers. Red light, green light is the first one. What is red light, green light?
That means you put in your own work and your own effort before you start to spend money.
Yeah, that's actually the second one. I apologize. Lead with revenue is the
Yeah.
first one. Don't spend money you don't have. Now, that's kind of crazy too, just real quick. Because when I first started, I had to have business cards, I had to have postcards, so I said, okay, it cost me about $1,500 to get licensed way back when. And then I put it in like another $300. And then I was working a part-time job. In Tulsa, Oklahoma, I was working a part-time job to have more money to pay for the basics so that we could invest more money into the marketing materials. And then you got to go to red light, green light. And red light, green light is just simply saying, hey, listen, I'm paying for X coaching or X database system or whatever, and I've budgeted this amount of money and I'm spending all this kind of stuff, but I'm going to review it every quarter or perhaps every month, but I'm going to review it every quarter to see if I'm getting a return. Now, if I'm going to start a 60-touch program, what's the appropriate amount of time that I should give before I expect a return? 9 months?
A year.
A year? Anybody else? I don't have an answer for it. It depends on your sphere, it depends on what you're trying to do, it depends on what you think. But I would say 6 months is bare minimum for a good touch program. But it could be 9 months, it could be a year. 18 months. What if it is? What's the average amount of time it takes a small business that just spent $200,000 to open up a brick and mortar? How long does it take them to see profitability? It's multiple years. I don't remember what the stat is anymore, but it's multiple years. And if you're in tech, they don't even try to make a profit. They just keep bleeding investors' money until they go bankrupt. So sorry. But the point I'm trying to make is you got to hold your money accountable. When I started blogging, I didn't expect anything for 6 months, but I was going to write on it 3 or 4. Now, was that money spent? Go back to the lead generator. No, that was time spent, which cost money, but I didn't have anything else to do anyway. I was trying to get, so I was looking for ways to keep these numbers as low as possible before I really understood what these were. And it wasn't because I was a financial genius. It was because I had no money. So be very diligent. Lead with revenue. The one thing I did that was really smart was that I didn't borrow any money or use any credit cards. Do you know why? Because nobody in their right mind would loan me money or give me a credit card. So that I had to 3 anniversaries. We got married in May 20th. 3 anniversaries in a row. I was farming a neighborhood up here in Northeast Olathe, and those 3 anniversaries, I would get my assignment at the telephone book company. I would drive out to the Olathe Armory, and the telephone book company was out there, and they would hire you to give out telephone books. So I would pack my car full, and they would give me the very neighborhood I was farming. Oh, what a big shot. I'm walking the neighborhood, handing out phone books so that I can have enough money to take Marie out for our 15th wedding anniversary. What does that do to your pride and ego?
That's not worse than calling them fist bumps, probably.
Yeah. I mean, I found it both humiliating and self-affirming that I was willing to do it when other people weren't. At the same time, it was this weird thing, right? All I'm really trying to say is this is a model. The budget matters, and it's time that we start treating our business like a business. That's it. That's all it is. And whether you use that exactly or you use some sort of confirmation of this, you play with those numbers however you want to, but start pretending to be a business person by having business checking. And for some of you that go, Chris, I already have a business checking. Are you using it? Are you using it as a business checking account, or are you just simply passing it through, writing and 100% to your personal life? There's a big difference. There's a big difference. All right. Any thoughts, questions, ahas?
I was gonna say that, I think it's easy to think if you save, save as much as you can, and that's the thing. But, you kind of look at that spreadsheet and it's like, well, you shouldn't be saving everything. You need to be putting that back into your business.
Yes.
So, saving is, well, saving is good, it's making that always the right decision. And I think that just is really good for top level guideline on how much should I be spending, or am I spending too much, or am I spending too little? If you look at the percentages, it just kind of helps you high level overall, kind of where I should be. However it's broken.
I love that. And if you can find some agents, if we can create a financial responsibility community in this market center where people would be willing to change, share their percentages such that they could say, hey, if you are spending 10%, why are you getting no return on that? Let's have a conversation around that. Tell us what you're spending the 10% on. What's working, what's not working. Yeah, excellent point, Susanna. And my heart can really hurt sometimes because I know the sacrifice that it takes oftentimes. But if you're not marketing, how do people know who you are? Now, one way to keep your advertising and marketing budget way down is to work in your own database instead of paying for everything that everybody calls you about or every email you get. But if you're going to do that, I'm not against that. You just got to hold it accountable. Hold it accountable. The other one that really hurts my heart is the education and the coaching. Get your education and coaching at least from somewhere. I told you, nobody in Kansas City could help me with what my dream was. So I got on a plane and I went to Phoenix and I sat there with, if any of you remember Russell Shaw, I stuck around into the bar later because there was like 20 of us and there was like 15 of us. And then about 1 o'clock in the morning, it's Russell Shaw, me and some other guy, I can't remember who he was and I've never seen him again, and myself with Russell Shaw. Russell Shaw was the #1 listing agent in America for like 5 or 6 years in a row. And he was the #1 agent on the West Coast for like 15 years. And I said to Russell, and he said this on a podcast many times, and I'd never heard him say it before. I said, Russell, how did you become the listing agent you become? And he looked at me and said, Chris, first I was a crappy listing agent. First, I got really good at being a crappy listing agent. And I just remember laughing or whatever, because no, I'm serious. I would get thrown out of listing appointments. I would not get the listing appointments. And then I would keep going back and keep going back. And he's the guy that started the whole 100% guaranteed listings program. That's how he became the #1 listings agent. But what was it? I got a Southwest card. I got a Southwest Airlines card. Does anybody have a Southwest Airlines credit card? It was the first time I've been able to get a credit card in years. And I had like $1,000 limit. And I spent $700 of it on the plane and the hotel and the cab that I had to use around there. I spent $700 of my $1,000 credit to go sit there for 3 days. And for 2 of the days, just hang out with Russell Shaw. Did I get a return on my investment? I think I did.
Chris, as you look at that and all the numbers, like there's nobody that's gonna go through this exercise and say, oh, I'm not where I should.
No.
But what it does, it's gonna be a compass for you to decide, determining where do I need to improve.
The law of navigation.
Yeah, and then next year it'll look better.
I love that. Because you can make real-time decisions. Kathy?
I'm gonna make an embarrassing admission. I've been in real estate now for 3.5 years, and I just did my first profit and loss statement.
You know what? That's not embarrassing because everybody else in the room's like, I still haven't done this. Right? So thank you.
But just to look at the numbers afterwards was very eye-opening. And it has allowed some new conversations.
Come up here real fast for me. Do you mind? I was gonna say, come up here. So in case you couldn't hear Kathy from the back of the room, she said she just did her profit and loss. Well, she did her profit and loss for the first time in 3.5 years, which takes a lot of guts, not to tell us, but to actually sit down and do it.
And
Okay.
it was stressful.
It was stressful.
Yeah.
And you probably didn't know what you were doing. Like you were like, should I put this here? Should I put this there?
Correct.
Right. So, yeah.
But I got the template from Trisha. And I was gonna do the profit and loss class and I couldn't make it. And she's like, if you have any questions, come talk to me. I could do it. And it just like all the numbers plugged in and it was great.
Okay. And then you started to say that you had real awareness after you did it. So tell me more about that.
The money that I was spending, I could focus on where I was spending it and what I was spending it on. Whether it be seminars or open houses or postcards, where I was putting my marketing dollars was huge. But just how I need to shift some things and just how I use my money.
If you lay your budget right next to your lead generation tracking, it will scream at you.
Mhm.
It will scream at you. Powerful. So you made real-time changes.
Yes.
Okay.
Yeah.
Can I encourage you to do that every quarter at the very least?
Oh, Paul and I are sitting down monthly and doing it.
Love it. All right, now, don't go anywhere yet. Don't go anywhere yet. If you were confiding in something to me, she was telling me that she can't, we have a small group, we just happen to both be in the same small group from our church. And we're going to kind of forego small group tonight because it's during the Kansas basketball game, for Michigan State. So everybody's going to come over, we're going to grill hamburgers. And she was saying that she can't be there, which is unfortunate. K-State fan, though, you didn't want to be there anyway.
Not
did you?
really.
Okay.
Not missing much.
So here's my question. Why can't you be there tonight?
So I have a listing appointment and I had met this person. I'd gone to the doctor and I happened to be wearing my name badge. And she goes, "You're a real estate agent?" I said, "Yes." She said, this was back in August. She goes, "I need to sell my house." And so I kept in contact with her and I was on vacation. So if you ever want business, just go on vacation. So I was on vacation last week and she called me Thursday and she goes, "I want to list my house."
Yeah. So let's break that down. What are some of the steps and ahas in there? We might go over a minute or two here, but this is real life. This is where a real life listing appointment came. What are some of the steps and the ahas in there?
Don't be a secret agent.
Don't be a secret. She wore the badge. She spent money on the badge. And then she wore the badge and she's not a secret agent. Exactly. What are some other steps?
Followed up, cultivated that relationship.
Followed up and cultivated. Yeah, because August and November are 2 different months, right? What?
I was gonna say the same thing as Megan, stayed in touch.
Stayed in touch.
Relationship.
Exactly.
But she also went from just first saying, "Oh, you're a real estate agent, I need to sell my house." Somehow you got the phone number and email, so what was that?
We just had
It's like, oh, great.
Yeah, we just had conversations.
You had what?
We just had conversations about what she was thinking, why she wanted to move.
But when she.
But you still
she
have
said that,
to-
Did you get her info right?
Yeah,
Instead of you just saying, "Here's my business card, call me,"
I got her phone
Said-
number immediately.
let me have your information and I'll follow up with you.
Started with building the relationship.
A lot of people don't like to give up that kind of information. I mean,
Well, then they're not going in your database.
Yeah.
You build a relationship, they will volunteer you.
Yep. So a lot of you need to get really good at forward conversations. Anybody tell me what forward is?
Family.
Conversation, recreation, dreams.
But if somebody tells me, hey, I'm thinking about selling my house, forget about all that.
So
What's your name and number?
So I've got another example from yesterday. I'm getting ready to have shoulder surgery this week. And I went to get an ice machine from this guy who's selling it and walked in. He proceeds to tell me his whole life story. He's a widower. He's getting ready to move. I said, "Really? I'm a real estate agent." And I mean, we talked about his house, what he's done, since his wife passed away, where he's moving, when he's moving. So I got another client from that too.
And how many people can probably surmise Kathy is not a shy person, right? She's not a shy person. So people forget there's shift tactic number 4 is all about lead generating. Shift tactic number 5, which nobody ever reads, is lead conversion. How to step up that conversation from, "Oh, I'm Kathy Smith to, can I sit in your house and tell you about your house? I'll tell you about you. So learn your scripts.